This report lays out an extremely high-energy bullish case for CleanSpark, using a technical breakout, a huge earnings beat, and a pivot to AI to back a $27 price target.
Yeah.
Okay, so what I really like here is the structure. It moves really cleanly from the technicals to the fundamentals and then sets up the bigger thesis.
Mm-hmm.
But while the report gives us this clear bull case checklist, adding some potential counterarguments would make the whole analysis feel much more credible, more robust.
The fundamental numbers are, they're undeniable. The material makes a really strong case for that future valuation just by highlighting the shift from a net loss of $145 million last year to a net income of over $360 million this year.
It's a massive financial repricing. It's a shock the system number.
It really is.
It's a phenomenal story. But let's get into the areas where we can fortify that story, because that growth, as explosive as it is, it really needs to be stress tested against the risks.
And we see how strong the material is. But when the title of the analysis is that bullish, CleanSpark breakout, why 15 is just the beginning, that relentless optimism, it's engaging, but it creates an immediate logical gap for any critical reader.
That's the weakness right there. This analysis is sitting at the intersection of three really volatile sectors. You've got crypto mining, power infrastructure, and high-growth stocks.
All of them.
So by not addressing the big known risks in those sectors, the bullish conclusion just feels less solid, especially to, say, an institutional reader. It's not about being negative. It's just about signaling diligence.
Exactly. A seasoned investor has to know the downside has been quantified. They're looking for the writer to stress test their own thesis. That's what actually builds conviction, seeing the risks clearly laid out and still deciding the upside is worth it.
So right now it feels like we're only getting half the equation.
We are.
I do agree that balance is essential for due diligence. But, the goal here is to be relentlessly bullish. Doesn't adding all this risk just water down the message?
No, it actually fortifies it. The suggestion here is to introduce a dedicated but brief section on the main limiting factors. It shows the analysis considered the bear case and still came out bullish. That makes the conviction feel battle-tested, which is so much stronger.
Okay, that makes sense. We need concrete examples, though, because these risks are, they're baked right into the business model.
Bitcoin on its balance sheet, that's a huge strategic asset. It contributes a ton to that balance sheet strength.
So we need a short section that addresses that. Acknowledge that if Bitcoin drops significantly, say from 97K back down to 50K, that $1.2 billion asset base gets eroded. Fast. You have to disclose that vulnerability.
And then you have to connect the risk to the future growth driver, the AI pivot. That's the most valuable part of the whole thesis. So you have to identify the execution risk there.
Right.
The report mentions securing 285 megawatts near Houston is the key asset.
And building out HPC data centers is complicated. There are long lead times.
Precisely. The material should note the possibility of delays in monetizing that capacity. And it also has to address the competition from the established data center providers, the hyperscalers.
Right. And just so we're clear, when we say hyperscalers, we mean the giants. Amazon AWS, Microsoft Azure, Google Cloud. They're all desperately chasing power right now. CLSK needs to explain how they compete with them.
And finally, there's the macro risk. Even in a place like Texas, large-scale energy use for mining and HPC is under a microscope. So acknowledging the risk of regulatory changes is just essential for completeness. It proves the analysis looked beyond today's favorable environment.
Okay, let's shift gears to the valuation part. The entire thesis really hinges on the market re-rating the stock from a Bitcoin miner to a much higher tech giant multiple. To justify that leap, the report has to detail how CleanSpark plans to monetize that infrastructure advantage.
As I see it, the core argument is that owning the infrastructure, that contracted power, is the moat. Because power is the scarcest resource for AI right now. And conceptually, that's very sound.
Yeah, power scarcity is the #1 bottleneck in AI growth, for sure. But we have to ask, is the connection between owning 285 megawatts and getting a much higher valuation multiple really established? Or is that an area we need to bolster with, some real financial evidence?
It needs significant bolstering. The section, the AI power play, establishes the opportunity, which is power scarcity, and the asset, the 285 megawatts. But it's missing the crucial details on the monetization strategy, the profit structure, the actual competitive advantage.
I see the weakness. The report almost treats the pivot like a guaranteed success just because they own the power. But the market gives those high-growth tech multiples to companies with high margins and predictable revenue, not just raw asset ownership. Why should this be valued like an Amazon?
Exactly. Think of it like this. Owning the land is a great start. But to get a tech giant multiple, you have to prove you're running a highly profitable 5-star hotel on that land, not just using it as a parking lot. The market values service margins, not just the commodity asset.
So the suggestion is to really expand on the AI strategy. Add details on contract structure, expected ROI, a specific timeline for revenue from that 285 megawatts. That's the evidence you need to prove the hybrid model is viable and deserves that higher multiple.
We need numbers that show the financial gravity of this pivot. So first, provide a contrast. Show the difference in expected margins between mining Bitcoin versus providing HPC or AI services with that same power.
Yeah.
If the return on capital is way higher in AI, say margins are 30% higher than mining, that needs to be quantified and put front and center.
So showing every megawatt they convert from mining to AI generates more margin makes the whole pivot undeniable financially.
Absolutely. And second, detail the kinds of contracts they're pursuing. Is it long-term power supply, co-location, or fully managed compute services? The reader needs to know what makes their offer unique compared to the big players.
Knowing the contract type tells you about revenue predictability, about margin potential. That's the stuff of a tech valuation.
And finally, you have to introduce a metric that links that 285 megawatts to potential new annualized revenue. That lets the reader actually model the impact of the AI pivot against that existing $766 million in revenue forecast. That quantification is essential.
Okay, so we've strengthened the argument substance, addressing risk, detailing the moat. Now let's talk about how we deliver this information. We need to look at the structure of the report, the initial flow.
That's a crucial area. The way it separates the technical monster breakout in Section 1 from the fundamental triple-digit beat in Section 2, it kind of misses a big opportunity to reinforce the narrative.
I get the instinct, though. Lead with the price action. Section 1 is all about the 12% surge, the huge volume, clearing that 1350 resistance. Then Section 2 dives into the fundamentals, like that plus 300% EPS speed.
But separating them slows the energy down a bit. The analysis itself says the breakout was an earnings-driven repricing. The structure needs to reflect that cause and effect instantly. Putting the technicals first undercuts the momentum of the actual news.
That is the weakness. That powerful fundamental data, the swing to $364 million in net income, the 102% revenue growth, that should be the immediate, undeniable reason for all that institutional volume in the gap up. If you delay that shock factor, the initial punch is just weaker.
When you have earnings news that good, you hit the reader with it right away. So the suggestion is to integrate the most shocking fundamental stat directly into the hook section. Make sure the reader gets the why behind the buying volume immediately.
Yeah, the narrative flow needs to show clear causation. Fundamentals drove the technical action, not the other way around.
So how do you do that? How do you execute that structural tweak?
Well, you could just reorder the sections. Lead with the earnings beat, then show the technical breakout as the inevitable result.
Or if you keep the current structure, you just need a sharp call out. In Section 1, right after you describe the gap up in the volume, add a short parenthetical or a bolded line linking it right to the EPS beat.
Like this wasn't just Bitcoin movement, this was the market instantly repricing the stock after a massive plus 300% EPS surprise.
Exactly. You instantly connect the action to the reason. It keeps the momentum, but integrates the crucial why right up front.
Okay, I like that.
And then you just have to follow through in the conclusion. Make sure the final checklist of bullish points references the earnings data, the 1.12 EPS, the growth, before it references the technical breakout. It reinforces that fundamentals are driving the whole story.
We've covered a lot of ground pretty quickly here, really focusing on how to elevate what is a strong analysis into a truly robust institutional-grade argument.
Absolutely. The core thesis, leveraging the fundamental success and that strategic AI power pivot, is excellent. It definitely warrants the bullish stance. To maximize its impact, we focused on, 3 key areas.
Yeah.
Integrating counterarguments and risks to fortify your conviction, adding quantifiable detail on the monetization of that 285 megawatts to really justify the higher tech multiple, and finally, just tightening that narrative flow to connect the technicals back to the earnings catalyst.
These are all highly actionable suggestions that stay true to the strong, high-conviction intent of the report.